Hi, I'm Doug McKinsey and welcome to the Fintech Show. Now, with demand for digital services and real-time payments currently at an all-time high due to the booming e-commerce industry, financial institutions are struggling to keep up with customer expectations. Today, we are talking to Søren Skov Mogensen, the Chief Growth Officer over at Banking Circle Group. We're talking to him about the role licensed businesses like Banking Circle are playing in enabling financial institutions to overcome these infrastructural challenges so that they can actually go on and offer up the solutions that their clients need. Joining us in the discussion is Angus Ross from Finastra, one of the world's largest fintechs, and they are working with over 9,000 customers, including 90 of the top 100 banks globally. And to round out the conversation, we have McKinsey's Albion Murati. McKinsey, as you're probably aware, is a global management consulting firm. They are trusted advisors to the world's leading businesses, governments, and institutions.
Competition is intensifying. There's a battle for the merchant interface more than we've seen before, and we see that every day now.
Are we going to increasingly see organizations play more of a hub role at the heart of an ecosystem, enabling this incredibly diverse ecosystem to connect?
Yeah, that's a good question. We get that asked, I would say on a daily basis, but it's probably at least on an hourly basis as to what is the one perfectly accurate definition of banking as a service. And I think I've probably given a different version of that every single time I've answered the question, depending on who the last person I spoke to. And then I was on a panel last week where we had a bank and a fintech and ourselves, and we all answered it in a different way, but we answered it in a similar way, right? And I always start with providing relevant, contextual, valuable financial services to retail and corporate customers in context. That's ultimately what banking as a service or embedded finance is. And we really focus on the consumption at the point of context, because the long-winded answer is, if you think of open banking, it was all about making banks' products and services consumable or accessible, right? It was just opening the front doors so a fintech could come and consume them real time. Embedded finance was, once they're consumable, embed them somewhere, embed them at a point of consumption. Contextual finance, in our definition, is actually the consumption of those services. So there's no use opening up your doors and plugging into something if it isn't valuable to you or no one's consuming it. And so we see it absolutely as a spectrum that we work with banks to create connections and APIs into platforms that are consumed by fintechs or distributors that drives volume and increased revenue for those customers. Not in 3 years, but as soon as you plug it in. So when we work with a customer, we work usually with both sides at the same time. We say, what is that point of context? What is relevant to that customer in that context? So even the customer journey work that we're working with the banks and the distributors, banks are used to creating their own customer journeys. You can't do that anymore where you don't own the point of context because you don't know what's relevant. So working collectively, and equally the points of distribution don't know banking products and services, right? And so when Amazon first put Affirm on its website for a buy now, pay later capability, right, they determined what was relevant, where the placement was, and they worked obviously with Affirm providers and to obviously determine what the right construct for that payment mechanism was, separate to other payment mechanisms that they're offering to their customers. The biggest risk with embedded finance is if you just listen to the banks, they will spam these channels with products and services that may not be relevant in that point of context. If you listen just to the points of distribution or fintechs, they don't know banking services and they don't know what's relevant to those customers. So it takes all parties to come together, and I'm not talking hundreds, I'm talking a handful, to quickly determine what is relevant, right? Underneath that is a data insight layer that sits either in the point of distribution, in our marketplace, or in a bank. And then obviously let's call it the API ecosystem that supports that. So from let's call it the tech stack, if that was sort of the basis of your question, we have providers that through APIs connect into a marketplace. right? I'm not talking a warehouse. I'm talking quite a tailored banking as a service platform, which is what we're evolving. At the same time, there's data analytics that sit across that. So if I'm a customer and I go into Home Depot in the US and I hit yes for a buy now, pay later capability, which I actually don't think they offer at the moment, but let's just presume they did that. I walk across the road and I go to Best Buy and I buy a bunch of TVs, buy now, pay later. And then I go online, I go to Peloton and I buy a couple of bikes and a treadmill, all buy now, pay later. At some point, that buy now, pay later capabilities that are provided by three very different organizations, it will be very, very valuable to follow that customer somehow, right? And I know there's obviously customer identifiable data that we need to deal with, but an ecosystem that starts to have the analytics, not just in the point of context, but following customers is extremely valuable. So it's not just the API ecosystem, it's the data analytics environment that sits across that between providers and distributors that I think will be the not the end state evolution of banking as a service, but it'll be the next step beyond what we're currently thinking about now.
We hear a lot about how COVID-19 has changed the business and the financial landscape, and of course the digital acceleration that it's brought about. But has it really had such a significant impact, or are these changes en route and been more of an accelerant?
I would like to say that it's put a bit of speed or pace behind the impetus. So 2017-18, open banking really came to the fore. We were all talking about it for a long time, about opening up banks' products and services and making them consumable by whoever wants to consume them, whether it be a fintech or a distributor. And as an ex-consultant prior to joining Finastra, I was always pushing this agenda. Then COVID kicked in, and we actually all thought it would pause a lot of the agenda. Just banks and retailers and points of distribution would ideally hunker down and protect themselves. But to stay relevant and actually service customers in context, not in bricks and mortar branches, for example, but through providing business stimulus lending, etc., banks and providers had to react, right? They had to become relevant. And so they really doubled down and focused on just getting things out to market that were extremely important at that point in time. So it showed them what was possible. The very nature of this video call equally shows that we could all work more virtually than what we used to. Yeah. So I think COVID, as much as it still is, it hasn't finished yet, right? Unless I missed the memo. But what it's done is it showed that in a virtual world, a very connected virtual world, retail organizations, banking providers, fintechs need to be uber relevant in that context, in a virtual world. So don't know if that answered your question, but I definitely think it's put a bit of a turbo behind what has been in place around open banking for 3-4 years.
Obviously, unfortunately, we have not seen the end of COVID yet. So let's see what the virus still has for us, unfortunately, and I think it continues to negatively impact societies and businesses across the world. But when it comes to kind of embedded finance and the impact on the financial services industry overall, I think to a large extent you're right. I mean, there were a number of trends that were already ongoing, right? And specifically, I think talking about embedded finance and banking as a service as kind of a topic for this conversation. I mean, already in the last 4 or 5 years, right, we saw more and more companies looking for ways to integrate financial services to better serve their customers. And this embrace of embedded finance was very much motivated by kind of the willingness to build stronger customer relationships. So think about merchants or marketplaces really, trying to find ways to build more trust, more loyalty, but also increase, lifetime value of their customers, right? And also, I think there was a pressure already that was ongoing for a lot of non-bank players to find ways to really deliver to consumers this demand for integrated experiences, right? So you have seen, of course, the one-click payment experiences, but I think beyond that, what embedded finance is providing is really the integrated ultimate shopping experience where I can optimize my lending, optimize the delivery of my goods, etc. All of that in one experience. And I think that's ultimately what a lot of non-bank players were trying to solve for. And there were two fundamental enablers to that, right? So on one hand, I think regulation, to be honest, I mean, open banking and PSD2 obviously forced that access to data and forced, of course, a lot of banking players to start thinking about how do I expose my services through APIs. And then on the other hand, we had kind of a new tech paradigm that has been slowly adopting itself within financial institutions. So think of all the IT modernization efforts that banks have done. To build modular components, often built on the cloud and delivered through APIs, right? So all of this, I think, was ongoing, right? And I think COVID brought a few things that obviously, are an acceleration to some extent, but to me are quite radical accelerations, frankly, and maybe are bringing the whole industry at a tipping point.
So how will an embedded finance ecosystem actually work, and what technologies are going to enable it?
No, but look, I think fundamentally there is really three main themes that are important here, and then obviously the picture is different for every vertical, right? But first, I think cloud infrastructure has played a very important role here because it has enabled, together with obviously building more modular kind of IT products, right, for rapidly building and scaling new propositions across the value chain to new customers, right? So I think that is kind of one part. I mean, APIs, as we all know, are very important for the way you kind of facilitate and push the products to kind of these customers, right? And building more straightforward and interconnected way between banks and players outside banking to kind of connect their services. And then ultimately, I think open banking, again, has played an important role here, also in terms of especially standardization, in terms of both access and format of data, right? So I think, the combination of big efforts to modernize IT infrastructure, accessing services through APIs, and, having more data to play with are the key components, on which a number of these, the providers in this ecosystem are playing, right? And obviously, I think we'll see more and more, technologies that you can imagine will start playing a bigger role here. So obviously, just to name a few more buzzwords, but I think they are actually quite important. I mean, digital currencies will play a role here, right? And how you also start, providing financial services through this platform will be important. I mean, I'm starting to hear also, a number of use cases being pushed on the back of, IoT technologies. So think about how do you enable, payments and even financing in the car or linked to the usage of the car, etc. So we'll see fundamentally new services linked to that, and probably we'll see a number of other technologies. That will start becoming relevant here. And can drive further automation, right? Financial products over time. Now, so with that in mind, right? I think that also provides, a framework for given this technology, what type of products will become relevant in an embedded finance, ecosystem, right? So this is why I think at least we've seen more simple products where you can provide end-to-end automated experiences by leveraging all these technologies that I mentioned, become embedded into broader, customer journeys. So that's why we see payments, financing, be it consumer lending or merchant financing, accounts, treasury management, these type of things that can be fully automated, I think, end up being very good candidates of banking services for embedded finance, right? I don't think we will see, at least in the near term, mortgages, for example, which might have a different regulatory framework, right? It's not yet in scope, for example, of any form of standard data, right, to be shared across the industry, or might require also additional regulatory requirements that enforce, manual processes, to say so, in a mortgage approval process. falling yet, to say so, in the spectrum of the service that could be, imagined in embedded finance. So that's why I wanted to kind of paint that picture of, like, given that kind of technical landscape that has enabled this, I think there's some candidates in financial service that will be kind of more natural to see as kind of potential, embedded finance offerings, and naturally over time, right, as we'll see, obviously, machine learning making progress, new forms of computing being enforced, regulation for further developing. I mean, obviously regulators are looking at, how to move from open banking to open finance, and how to cover, more products in scope of data standardization and open access efforts. We might, of course, see a broader and broader share of financial services becoming relevant.
Are banks and payment businesses ready to take on these new opportunities and challenges?
Short answer, yes, right, with a few caveats, right? So if you think of the three archetypal participants around embedded finance, there's the banking providers, the banks, there's the end point of consumption, the distributors or the embedders, and then there's the organizations like Finastra that sort of sit in the middle as the enablers, connecting supply and demand. And I know there's a lot of nuances across that spectrum, but if we just think of those three archetypes, each of the players in those spaces are at different stages of maturity. So if you look at the global banks, some of the tier zero universal banks are definitely leading, right, in terms of that sector. But equally, some of the smaller regional banks that we deal with as Finastra as well are equally pioneering things around buy now, pay later, or digital wallets, or lending propositions to different sectors. So I would say there are 10 to 20% of the pioneers in each of those three archetypes are hungry and bullish and doing things. The next 30% are curious and wanting to be early followers. And there's, as in any industry that's being disrupted, there's always the 30 or 40% that, even though they're talking about it, they're not doing anything, and they probably won't do anything, and they'll be disrupted.
I think the industry has not fully cracked, I think, the opportunity. And I would say that there's kind of two things that need to happen, right? On one hand, you need kind of new technology and new capabilities. And here I'm not just talking about how to build more modular services that will distribute to APIs, right? But you also need to build strong risk and compliance, management capabilities that can actually operate in real time. Because as the embedded finance partner to a non-bank, most of these non-bank players will actually expect from their providers to also take care not just of providing better financial products that they can embed in their journeys, but also take care of all the risks, to say so, that come with providing financial services, right? And this is where I think at least, the banks should have a stronghold, but have not built the products yet. And on the other hand, if you look at the picture from a fintech perspective or a payment player's perspective, they've started to build the products, but don't always have the balance sheet or risk management capabilities that will also be required. So that is kind of one thing. The second thing is that, and this is mostly valid for banks, I think banks will need to rethink fundamentally their business model, right? Because when you get more proactive in playing in embedded finance, I think for a number of banks, there is a bit this concern that I'm actually giving away the access to my customers and my distribution either to end consumers or end merchants, right, or small businesses, and actually more than 50% of banking revenues are linked to distribution, right? So this is ultimately what you're giving away. So there is a risk for banks in moving this model, in just ending up as dumb utilities, to say so, right, where you control the balance sheet but not much more. And I think that's where we see that banks will need to rethink, for example, the monetization model. Should I actually also charge for access to my APIs, or is there another model than just making money on the balance sheet, to say so? That has been the more traditional way of making money with these type of propositions. I mean, banks will need to build also new distribution kind of capabilities, because you need to get into a B2B2C or B2B2B type of go-to-market approach, right? You're no longer optimizing for serving the end consumer and merchant, but really serving these ecosystems, merchants, or marketplaces, right, that can give you access to that customer base. And then obviously there's some questions around branding, right? Do I want to go with a co-branded approach, white label approach, or whatever that is? But there is obviously benefits that also come with it, right? I mean, obviously for banks, you can massively lower your cost of acquisition, right, by leveraging kind of the access that some of these platforms can bring, and then you can I mean, also leverage data, non-bank data from your partner to also make better credit decisions, right? So net, I mean, you hear it. I think the opportunity is huge. I think both banks and payment players and fintechs are still, capturing just a small portion of I think what we'll see in this industry. But it's really this combination of like, how do you bring the old and the new together that is still lacking, right? So how do you continue building better banking products, but also deliver strong risk and compliance to your partner? That I think will be ultimately what a lot of customers for these embedded finance offerings will be looking for.
Absolutely, but I also think it expands beyond banks and payment companies. You certainly have payment companies going for an expansion of their service propositions towards the merchant. They want to add on more. They want to add on accounts, like virtual accounts. They want to add on lending, issuing, indeed buy now, pay later, and much more. So they want to surround the merchant customer with an ecosystem of propositions and opportunities. And that's really a strong proposition that we see now delivered very well by several payment companies. We see banks do the same thing, but above and beyond that, we also see ERP systems doing so, creating an ecosystem where indeed cash management and transaction banking and payment solutions are a part of it. And we see software platforms, just like Shopify, deliver solutions such as payments and capital. Finally, you have aggregators, fintech aggregators, who are also in this space.
I'm sort of seeing how grey my hair is before I answer this question, right? Because there's a certain part of me that's a bit not bitter and twisted, but I lived the fintech disruption hype in the last 8 years, right? Where fintech was going to completely cannibalize most of the businesses the banks dealt with, and that didn't manifest. They took a bit of the clip around payments. They've done things around home improvement lending. There's different spots where they've encroached. But if you look at where we are today, especially around embedded finance, the opportunity is more around partnering with those organizations. So there's one initiative that we're working on with a large telco and a large global bank at the moment, right? And I won't mention who they are, but they are large historical organizations that I would say are working at a pace no different than the earliest fintech. So I don't think you can talk around pace and embedded finance adoption based on just the new market entrants. There are some incumbents across all sectors that are very aware of the opportunity, very hungry on the opportunity, and partnering with different organizations that help them, fill the gaps that they currently don't have, whether it's, commercializing a partnership deal, whether it's providing a capability or providing a channel.
What will the embedded finance of the future look like?
I think it's very early days, right? I'd love to sit with my crystal ball. I'd probably be retired and rich if I had one of those, but let's presume I did have one, right? Technology innovations have opened up the ability to do this, right? If you even look at the commentary around unbundling of banking products, because you could open a full benefit account for a customer and not have a banking license, right? Because technology actually enables that. What we see is lots of slices of technology that starts to enable this, but we haven't seen it all come in together to really leapfrog a compelling proposition to an end customer in context, right? En masse, right? You can open a wallet, right? You can make it a real-time cross-border payment. You might be able to do a buy now, pay later capability. But can I do all of those things and follow me in context across multiple future touch points that's relevant to me as a customer? Not really yet. Technology's catching up with following that and making it relevant. So I think there's the big two major, let's call it, outcomes of embedded finance. Firstly, most banking, most financial services transactions or activities will occur in channels that banks don't own, or that are traditional. They may have equity interest in them, whether it be big ERPs, whether it be accommodation platforms or financial service platforms. It may be telcos. Financial service transactions will happen in those new touch points, the bulk of them. The more interesting thing is that we're exploring at the moment, very earliest days, is machine-to-machine payments and lending. So take retail points of context out of the equation and take banks out of the equation. If I'm a large freight forwarding company, for example, and I have a chip in different parts of my value chain that tracks when payments get made based on where a shipping container is, for example, or if I want to pay for a unit price for an electronic vehicle charging station, or the whole IoT machine-to-machine connectivity where humans aren't involved in the actual handing over or asking for money, embedded finance will enable all of that. And so earliest days of thinking about it, but it's not just about banks providing products in captive points of context that there are other humans in. Machine to machine is a whole new world for it.
What will the future of embedded finance look like?
If we look at where we stand today, so embedded finance is really about e-commerce, marketplaces, and some of the digital ecosystems, right? Where we're seeing payments and financing being embedded. Going forward, I do expect that we're going to see embedded finance being integrated in a number of other ecosystems. So think about social media, think about, travel and hospitality. You can already get, for example, your travel insurance through booking.com, right? So what if you start having even more services through that? Think about the telco players that could play a role, for example, when it comes to enabling IoT journeys, right? And potentially also into other industries, right? Think about energy, health, and others. So I think the future of embedded finance is fundamentally a new way of delivering, integrating banking services through new customer journeys, and I think we're going to see a kind of massive expansion in a number of new use cases, while today I think we're still very limited to kind of whatever touches the e-commerce, online marketplaces, and kind of the digital ecosystems work.
I think the ultimate winner will be the consumers and the merchants who will have a more rich variety of providers to choose from. And I think each category of provider will need to intensify their game.
When it comes to embedded finance, who's going to be the winner? Is it going to be the traditional banks? Is it going to be the new players, or someone we haven't thought of?
I think it'll be all three. If you just look the past 5 years, who's been the winner and losers in certain tech evolutions, right? The first movers who have tried and failed and tried and failed and tried and succeeded and started to scale the success, they're always the early winners. And then there's the large, and they're usually smaller organizations, just because of the speed of which they can adopt a certain transition. Then some of the pioneering larger organizations that have something to protect and have an entrepreneurial mindset are the early adopters of that. And they scale it and they make significant money out of that. So I think across the three spectrums we spoke about, the pioneers and the early adopters will definitely win. I think one caveat that I want to call out, if you think of embedded finance, what people pay for, how much they borrow, how much they use the value-added services across the global spectrum, and in aggregate, won't significantly change. Say there's a 20% uplift because someone can do something now that they didn't think they could do before. It's really a shift from where they're doing it today to somewhere else, right? So that market size, let's say it's 20% higher. The ones that tap into that aren't going to be the volume of players that there are today. You cannot have, if I'm trying to give you Home Depot, for example, right? And when we're not working with them, so I'm not trying to plug a customer that we're currently working with. 5,000 banks can't go and provide 5,000 banking products to Home Depot. It is just not relevant to that customer in context. Even their small, medium, and even larger business suppliers, right, where you can have lending products and propositions to those customer groups, 5,000 banks can't provide products to them either, right? It's going to be a handful. And so if you think of, if I was a bank, right, I would want to be one of the earlier adopters and participants in those marketplaces so I can shore up my priority placement in that marketplace. So I'm one of the first 10 or 15 or 20, not one of the last 5,000. And I think that's the nuance here. And I think the sense of urgency across the spectrum is first movers will definitely win. Early adopters will definitely win. Late adopters, I don't want to say will definitely fail, but they will find it a lot harder to succeed.
Well, that's all we've got time for on today's episode of the FinTech Show. It really has highlighted the incredible shift going on in finance currently, as payment values go down and customer demands go up. So thank you to all our viewers at home, and I'll see you next time. Goodbye.